Could BlackRock be the catalyst for the next crypto bullrun? And is Binance actually insolvent? Today, I am joined by two macro heavyweights, Joshua, Jake, and Will's Outlook from Because Bitcoin. And yeah, we have a great long discussion, and let's get straight into it. All right, everyone, welcome to this macro roundtable slash just discussion. Today, we're going to be covering a bunch of topics: crypto, macro, metals, all the crazy stuff that's going on in the world, and we're going to hop straight into it. But first, let me have my guests, introduce themselves. Who are you guys? Let's go.
I mean, if you want to go first.
Yeah.
I was like, we'll just go. Yeah. So I'm Joshua Jake, guys. I cover a lot of crypto content, geopolitical, international relations on TikTok. I have a few different shows. I'm now doing a show for Cryptos R Us, as well as have ran a few different successful companies in just the Web3 industry on the marketing side of things. So I've worked a lot with venture capitals, et cetera. And I've kind of just seen everything happen from behind the scenes. And I actually also join Will on Because Bitcoin quite often on their Twitter spaces, which in my opinion are the best probably Twitter spaces on Twitter. So shout out to Because Bitcoin.
We definitely appreciate that, Joshua, and we enjoy having you. I think overall, yeah, we try to keep things to a grounded state. There are some people with some extreme ideologies, but you just gotta kind of keep things within line. But I'm Will, with the app Because Bitcoin. I'm sure you could figure out my last name if you really wanted to, because all my stuff is out there. I'm doxxed and everything like that. So if anybody's interested, feel free to go ahead and research me. I've been basically trading markets for roughly about 12 years. Two more is like very, very early premature type trading. So I wouldn't really account for it. So I typically like to say just 10. But I came from traditionals, more or less. Came into crypto around 17, got completely obliterated in 19 because I didn't quite understand the markets as well. And I kind of took them as you do traditionals, right? You expect slow and steady, and everything kind of ran really fast. But outside of that, I learned my lessons. I made out really well in 2021 because I didn't play that. I didn't let it play me a second time, right? And yeah, I mean, overall, we basically go over on a daily basis at Because Bitcoin with like macro. We go over, what's in the news, what all is going on with markets, but we tend to lean on volume and liquidity more than we do macro news, because a lot of macro news ends up being false, which we'll be talking about a little bit later too. And it comes out as initially something real, but then, ends up being something wrong later on, or just completely offside as far as what it was or what it was intended to be put out there as.
All right, cool. Yeah, so we're just going to hop straight into it. So recently we saw there was a fake news tweet that came out from Cointelegraph saying that the BlackRock spot Bitcoin ETF got approved, when in fact it really didn't, but this caused the markets to pump. And now we're seeing a bit of FOMO about it. Markets reacted, pretty heavily towards it. What are our thoughts on what just happened with that whole thing? And yeah, who wants to start? You got it.
Your mic's muted.
Mic's muted.
Will.
Oh, my bad.
That leads right into your that leads right into your misinformation that you just talked about on the macro scale.
Yeah. If you want, I can start out on it. As far as my perspective is, you can look at it two ways. Like this is a two-sided coin, right? And I think a lot of people were just looking at one, and that's always the issue in these markets. And BlackRock did touch on this. Keep in mind, they did touch on this even when they made the statement, "Hey, this is fake," yada yada. They did touch on their thoughts on it, and I definitely am leaning into their thoughts. So I would say when you're looking at this, you're like, man, that's messed up. They threw out fake news, yada yada. I think that's completely inappropriate in a lot of ways. Always verify your information before putting it out there. Not saying that we won't make that mistake at some point. Everybody does, right? And that's why you have to always be lenient on people unless they do it over and over again. Then it's a problem, right? So it can always, everybody can judge that how they want when it comes to those kind of things. But I think that when I saw it, I was like, and then I saw the pump and I was like, there's something going on here, right? And you got to really pay attention. I think a lot of people like to FOMO into those moves. If you're not already into the move before it happens, and you don't want to be a part of it, don't join in the fun because it looks fun, because on the other end there's a swamp and some alligators and everything else. But we saw the move up, and here's the thing. Here's how we looked at it from as we go in. We were pressuring the highs prior to the news. We were pushing into 28K as far as price goes, and we were like, okay, all it's going to take is a little trickle of something to push us through this resistance, right? And it pushed us through resistance. So from an analytical standpoint, it was good, and it was able to push markets to a point that should have rejected or could have rejected. But because we got through it, it was able to allow the market to breathe higher, right? And a lot of people were like, oh, it's a scam pump. It's going to retrace. Everything's going to come down. And we're like, no, like you push through resistance, you have room to come up. So even though these fake news scenarios come up, they often tend to play into market sentiment, right? And market sentiment, in our opinion, especially mine, was that the market wanted to go up either way. The news definitely pushed a lot of money in and probably had a lot of people sell at losses. And now we're right back to where we were and pressing higher. And these things tend to, they tend to appear fake up front. And I don't mean like the news wasn't fake. The news was 100% fake. And BlackRock verified this. But the one thing that BlackRock said that I agree with specifically is that they said the one thing you saw from this pump, because they didn't look at it from the fake news side, they said was the pent up interest in a flight to quality. And those words right there specifically were the words that I took out of the entire thing versus, coming in, looking at it like fake news and everything else. When you heard those words specifically from basically a portfolio like BlackRock's, you're like, man, if they're saying stuff like that, they are very interested in this asset class. And for me, that just, when you hear that, it's like, the market can't retrace from here. It's going to hear those words and it's going to see interest in Bitcoin because it's going to be like BlackRock, one of the biggest portfolio managers out there, is very interested in this asset. I need to be in. And that's what we're seeing right now with price, right? Price is pressuring 30K range. And I think, honestly, we're looking at probably going higher. But you can give your thoughts on that, Joshua, too, if you would like.
Yeah, coming from Cointelegraph side of things, Will said it perfectly with, as long as you're not repeating the mistakes, like there's going to be moments where you just report the wrong news and there's nothing you can do about it because CNBC, CNN, Fox, everybody picks it up and sparks it. It's a wildfire. Everybody's talking about it. So you're like, oh, okay, well, if they verified their sources, it might as well be verified. And this has actually ramped up and become a huge issue, specifically with the Middle Eastern war. There's been so much misinformation spreading around. You don't even know what's real and what's fake and what's AI. And some of your largest news outlets are just reporting the wrong news, and they're not being humiliated and apologizing when they get called out for reporting that news. And this isn't the case of Cointelegraph, and is why I don't use them in my shows anymore, is because their chief and editor came out in Dubai the day after and was like, "Well, it's not our fault, it's your fault. It's the community's fault for making us talk about things so quickly." And I was like, okay, well, you just released an email thread of your journalists not verifying sources, which every good journalist knows you need to verify sources from two different people before you publish. And so in that case, this is also what you saw with Watcher Guru, which we'll talk down the line a little bit. It just goes to show that we're at a time in a market where the only way you're going to generate views is by clickbait, fear mongering, and then spreading and pushing a narrative to get as many clicks for your advertisements. So that's one way to look at it. The other way is that this is incredibly bullish. The flight to quality quotes coming out of BlackRock goes to show that for the last 5 years, where Larry Fink's manipulating markets and saying that Bitcoin's a money laundering aspect and only good for money, it's a money laundering index, actually, that was his quote, with Jamie Dimon and all these people at all these conventions for years, goes to show that makes me incredibly bullish on the narrative of a Bitcoin spot ETF, because if they're starting to market and anticipate Bitcoin as a product that is a hedge against inflation, or again, this flight to quality, it tells me that we're months, if not a year away from that Bitcoin spot ETF getting approved, because now they're going to use all of that for the marketing to the financial advisors when we are at a moment, and what we'll talk about later on, which is potentially something to break in this market, and Jerome Powell actually get what he's looking for, which is getting consumers to start saving, unemployment to rise, and bring down those inflation costs. And so at that moment, I think it's the perfect setup for consumers now that are saving to save in Bitcoin, 1 to 2% allocation of their retirements, et cetera, stuff like that. So huge moment. And I think the best, the biggest thing out of this is, the market moved 10% based off fake news. And maybe a few traders got very lucky on the inside for that, I am sure, but Just imagine when it is real, and now you have every single mainstream media across the globe talking about the world's largest asset manager accepting this as a kind of the next best asset class.
Yeah, I just wanted to add to that too. Like, I just think about it, and people like they hear BlackRock, or if BlackRock were to get the ETF approval out of all of them, which I would expect them to get them first, right? Just because you know how the SEC is towards some of these other ones like Grayscale and everything else. So they're more than likely going to be more lenient against the biggest asset manager versus all these other ones, and it's more of a monetary scenario. We obviously know that. But I can only imagine the wildfire that would spark in governments across the world, right? Not simply money managers, but governments would be like, we are behind. And then governments may potentially at that point, again, I'm just speculating. I don't like to come out and make up fake news. Speculation
I would say
that you would see them find interest.
And for a lot of people that don't even realize, a lot of the a lot of people that worked at BlackRock or that were politicians or in some certain government communities, et cetera, that were just working for the government, it's a revolving door with a lot of these asset managers. So like Brian Dees, you have a lot of people that were the economic advisors for Biden, a lot of people that have been appointed into chair positions for the Treasury. They've all worked at BlackRock. So it's also like a bullish aspect of, okay, well, now the largest asset manager has a product. They are one of the largest partners with the Federal Reserve, which is private. People don't even realize that's separate from the government. It's like, this is a huge moment for not only just the adoption, but regulation coming down the future, which is something, again, I think people should be not scared of. It's just aware of is these asset managers are here. They're going to manipulate markets. They always have. They always will. And I'm going to make a bag, watching what they're doing, their every single move. So,
Yeah, I think that's what we're all here to do, make a bag off the whole thing. But now we're going to transition to, we were talking about fake news and Watcher Guru. So recently we saw coming from Watcher Guru and a couple other news outlets that the yuan surpassed the euro to become the world's second most used currency for SWIFT trade settlements. And you guys can elaborate, is yuan actually going to be able to challenge the dollar with BRICS and everything? What's going on with that whole situation? So,
yeah, I could start with this one. So first and foremost was going to be the article they actually quoted, which came from something called Good Times, I believe, is the publisher. So there was the publication wasn't even from a direct author. But whenever I see that, that's almost an immediate red flag because that's going to be a very broad overview of a subject. And you want to go source out where they're getting this information from. So when you click on an article, there's no hyperlink to an article that has evidence or citations or sources. You immediately got to look at that information is like with a grain of salt, right? The second key aspect here is when you see someone say, oh, China, the yuan is replacing the US dollar. And then you click on their link and the first thing that pops up in their headline is BRICS. Okay, well, first and foremost, the yuan is not BRICS. Yes, China is the largest, economy in the BRICS nations, but the whole argument of a BRICS currency would be launched that would compete with the US dollar down the line would have nothing to do with the yuan. There's a lot of speculation around that. So that probably tells me that certain source or news outlet is a XRP maximalist or falls under that category of some like new world order, flip of the switch type shit. But in the sense of what actually took place with this article, Good Times is a CCP propaganda piece. A lot of people call it kind of the Fox News or CNN of China. And of course, the sourcing that came out from that information had nothing to do with global transactions, which is what the article kind of try to portray this narrative as. It talks about China themselves on a state level. 24% of their transactions were done in yuan and settlements for trade. On a global scale, they're still number 5 or number 6 when it comes to SWIFT transactions. They're far below the euro. And the only article that I saw, or the only statistics I saw where they beat the euro, is in trade finance. And it was by like 1 or 2%. And the US dollar is still like 85, 86% of that. So even on those, with those statistics and those margins, you're looking at a 10, 20, 30, 40 year cycle on before it even has the capacity to even compete with the US dollar. So honestly, from Watcher Guru, it was just, I think, news aggregation, and they just slapped a clickbait article to push propaganda, I guess. Yeah.
Yeah, I find it interesting how, a lot of these trusted news sources we see, especially on the crypto side of things, they tend to just pick up anything off the internet that they can find that's very clickbaity and just slap it up and try and get reaction from it. And this is why you have to be cautious about what you're listening to. And this is why, investment strategies and stuff like that work very well, because like if you're sticking to your strategy, you aren't even paying attention to these because they're not a part of your strategy, right? And I think that's how a lot of money managers and everybody else move. They don't move off news. They move off of what their strategy is. Are we going to DCA week by week, month by month, or are we going to go in a different way? But I would say also with this whole thing, like I find it hilarious because I hear a consistent conversation around BRICS. What's the agreed on currency for BRICS? I haven't heard of any. So how do you have a united currency if you don't have the U.S. is the U.S. dollar? That's what everybody agrees on with the U.S. So whose currency are they using in BRICS? Nobody has an answer for that. So what is BRICS? It's propaganda. That's all it is until they decide on who this is the currency we're going to use, right? For the U.S., everybody uses the U.S. dollar, right? That's the currency. That's the backing. But when you look at China, Russia, all these people involved with BRICS, none of them are going to give up the rights to their currency, because that's what you're doing essentially if you back a currency. You're giving up the rights to your currency to the country that you're propping up, right? And you're expecting that country to be fair to you. Do you think Russia wants to get underneath China? Do you think China wants to get underneath Russia? We'll just use those countries in general. I don't think either one of them wants to get underneath the other one. I think they're in this for we'll say basically for themselves, right? They're in this at the moment to try and get away from the U.S., pretend like there's some kind of strength, and trying to pretend like, hey, we can operate outside the U.S. I tell them good luck, because if you can't get your currencies to come together under one united currency, right, you have nothing. You have nothing. Outside of, now they could do it, and I'll throw this out there, through gold. But then at that point, they lose control of their currency. And then a lot of people don't understand that. They're like, how would they lose control of their currency? The strength in currency is the ability to be able to print. Gold would limit that, right? So you can't manipulate currency if you can't print currency. So because you need gold every time to print currency, you are now limited by gold. And now if you try to compete with a country who can just print you out, like the U.S., you're not even going to come close. You're going to fall behind.
Especially when you're a growth-based economy like China.
Exactly. Yeah. Exactly. And especially with their population. Like to even consider that would be insane.
Yeah, I've been looking through this on a lot of different points. See, the demographics in China is like a whole nother issue, which on a decade time span, there's economists debating on whether or not they can even withhold the manufacturing that they have, or they're going to kind of transition towards a stagnated economy like Japan, which we're already actually seeing a lot of signs of. The real estate market's in shambles. They're reliant heavily on energy and your agricultural exports. But from the BRICS narrative, you're 100% right. We're like looking at, this is why I actually don't understand why BRICS is kind of propped up a lot by the crypto sector and certain people within the crypto sector. And it's alarming to me, because crypto is about transparency and trust. Yeah, one, the entire crypto industry is reliant on no transparency and no trust, because we're trusting people it's all reliant on trust from CZ, and not eliminating that third party. But two is like BRICS, you're essentially trusting a bunch of authoritarian dictators that we can't even audit in the United States and have slapped countless tariffs and sanctions on. Good luck ever getting any sort of real information out of those countries in terms of the statistics for their currencies. So a gold-based currency, yeah, like Will said, I mean, you're talking about deflation in a way that they want to be able to deal with. And again, when you're going against an economy that can print money and is still fundamentally stronger and larger in every single aspect it's not even a comparison. There's just no world where I see that existing, at least in the next 10 years, And it will still exist, by the way. BRICS is it's just going to be an alternative. And that's the other thing. The new development bank, by the way, they don't even have all the infrastructure that we have with SWIFT. They don't have an IMF. They don't have the World Bank. They got none of that. And all the capital is pretty much primarily funded by China, which is failing in all aspects in a lot of different ways for nationalizing themselves and their currency through the Belt and Road Initiative and everything. So it's a long debate. It's a long debate that I think is just pushed too hard.
Yeah, it's pretty interesting with China. I wanted to bring up another thing too with China specifically, and I think a lot of people aren't paying attention to this. And I think that's really the separation of the U.S. and China. Now, some of you may be like, well, there's no separation. I think there is. When you saw, and I'm going to give a couple examples, and some of them you may be like, oh, that doesn't matter. I think it does. You see basically companies like Blizzard, right? I would say a good chunk of their overall revenue came from China specifically. they basically cut off their ties with NetEase and canceled all contracts, which means they can't operate in China. They run through a third party to operate in China through a brand. And there was no explanation as to why. Some people speculated on price and so on and so forth. And you're seeing a lot of countries move their manufacturing out of China or from China, or just redirecting any new manufacturing to other countries like Mexico, South America, Canada, so on and so forth. Companies are no longer opening shop in China at this point. I find that very interesting. The only one I saw open shop a lot was Starbucks through the pandemic, but even then, I think that they're probably going to cut down production. And I think that's a sign potentially of some kind of backdoor conversations between businesses and probably government. Like, hey, slow all business in China, start operating in other locations. Now, that could just be a theory, but it's something that I'm paying really close attention to, is these companies that are relocating where they do have cheaper manufacturing in China, or relocating to places like Mexico, South America, and Canada, where it's going to cost them a little bit more for manufacturing, but they're doing this.
Yeah, there's a really cool chart I got to send you after this. Private money in China since 2017 has been on a massive decline and been sucked up more and more by the government and the local state. So it goes to show that the private sector in China is slowing down massively, which could have a massive impact on growth in the future. But then we had like the CHIPS Plan 4 Act as well, which just got passed by the Biden administration. What I would watch with China is, I 100% agree in the separation, even though we should be focusing on peace and collaboration between the two. They're the second largest, great superpower in the world. Then you have Russia, which is a nobody at this point. When it comes down to it, if we're pushing out and cutting them like at all these points, issuing these tariffs, Xi Jinping in 2022 said, that the United States are trying to cut us off and, close us and hold us down because we're developing a large military. We're growing faster than them. We're on set to do, I think, in 2022, the Belt and Road Initiative was estimated to bring them another $9.7 trillion in GDP growth. And it's like, with those numbers, that's threatening to the elitist and the American security. And so this is why the Taiwan whole aspect here is very important to pay attention to, with things like the bill that Biden conveniently pushed through with the Israeli conflict, which is really funding the Ukraine war, and then even funding more money to the Indo-Pacific. And that is going to be something we have to watch over the next 3 to 4 years. And that's something that almost a lot of economists agree on, is that there's going to be some sort of conflict there, because the only option here the United States sees is that we're going to back the Philippines or Taiwan. And Taiwan's like, no, we're not going to allow that because it's a threat against our security. But again, the U.S. thinks it's a threat against our security for them overtaking Taiwan. So there's like this tension here, and is why you're seeing the manufacturing move to states. You're seeing the private sector get sucked up. They're focusing on military ties. It's kind of just like it's a ticking time bomb, and we all know that we want peace and collaboration, but unfortunately time just tells that doesn't happen.
Well, just to tie into what you said, I know we have other subjects, so
yeah,
we'll
I'm trying not to tangent.
I just had one more thing. A lot of that, pulling that manufacturing back too, and I think some of it is coming back to the U.S. too, right? And when people sit there and they talk about jobs need to decline, recession, it's like, you could see recession come much later, because as these jobs come back to the U.S., it's only supporting the job market, right? No matter how much we need the recession to kind of cool off the inflation, at the same time, that recession may not come for some years, just due to the fact that we're pulling
stagnation, kind of, yeah.
Correct. Exactly.
Yeah. So good macro talk. We're definitely going to head back to the macro talk at some point, but now we're going to pivot to crypto. And Josh, during his talk, he was talking about how the whole crypto industry is basically reliant on trusting CZ. And we know guys like Dylan LeClaire and Josh himself right here have been very vocal about what is going on at Binance. So there's been a lot of talk about Binance is really insolvent, that it's really just Hotel California and all that stuff's going on. So what is going on at Binance? Is Binance, looking forward to an inevitable collapse, or is it going to make it? Josh, I know you got a lot to talk about, so I think we're going to let you lead this one.
Yeah, so I like the insolvency comments. What I have to say to that is our entire fractional banking system's insolvent. So the only difference is that they legally can print money and Binance cannot. Now, why I talk about Binance a lot of the time is because people are all about how crypto is the separation from the traditional sector. It's a fix, it's a solution to fractional banking. Whether you get into Bitcoin, altcoins, etc. The entire industry is relying on the volume. It's almost all being traded through Binance. They make up for 70, 80% of the volume of this industry. And it's why you have to watch. And I believe there's a war happening right now in crypto, which is between stable coins. And the stable coin issuers and those suppliers, those are the people who really control this industry. Why is that? Because when you print a stable coin, when you create a stable coin, you're giving one digital currency for someone's US dollar that you created out of thin air. You're just giving them this dollar and saying, hey, now you can go use this to convert it into Bitcoin, Ethereum, or whatever altcoin you want. What I take with that dollar that I printed out of thin air is I put that into US treasuries, and then I earn a massive interest rate on that. So right now in these markets on short-term bills, we're looking at a 5.5% interest rate for a 3-month for treasury bills. You're looking at, that's pretty massive yield. And when you're doing hundreds of millions, if not hundreds of billions of dollars in transactional volume, we're talking hundreds of millions and billions of dollars that Binance is now printing out of thin air, acting as not only the hedge fund manager, the exchange, but as well as now the money printer. And so they have all three mechanisms into what I believe is just blatant market manipulation and too much control. It's a monopoly over the sector. Now, whether that actually means they're going to fail, I don't think that's necessarily the case because of, in fact, actually what Larry Fink said about Bitcoin, flights of safety, et cetera. BlackRock, the largest asset managers in the world, they've been investing into NCR, Blackhawk, which are point of sale systems. They've been investing into all of your Bitcoin miners for years. Even while they were talking their shit on the crypto market, they were investing. And they are invested heavily into Circle and manage USDC Circles, which is USDC, the stable coins, their reserves. So they're earning interest. So they know how this market works. They know that you want to control the stablecoin supply because whoever has that gets to print literally free money in a high interest rate based economy. And they're kind of governing everything that happens in the sector because what you can do with stablecoins, is what Binance is doing. Since they control 100% of this new token called FTUSD, which was just created randomly in June of 2023, so a few months ago, ended up doing way more volume than Tether by massive margins. Tether has an $83 billion market cap. This had maybe a 200 million. And you're saying that was doing more volume than the largest, stable coin in the market? Probably not, right? There's something wrong there. But the primary factor of this is now Binance can set up staking pools and also take the stable coins that they're printing out of thin air and then offer like a 60% APR. And they incentivize all these retailers and market you to go stake your assets and, stake it for whether it's Polkadot or another crypto out there. And all of a sudden they're printing not only the 5%, the interest that they're getting off T-bills, they get 60% APR if they're on staking pools, which again, they control. They can, use that to fund other ICOs and other projects and control more supplies and manipulate ICOs and markets that they're pumping through things like CoinMarketCap, which Binance owns. Mm-hmm. And so it's this massive, I don't want to say money laundering or fraud because this is no different than traditional markets. It's just the point I like to make across with the crypto sector where we're reliant on almost one entity. It's one entity. They're the majority of the industry. We're reliant on them in the same way that the traditional banking system is reliant on the fractional reserve system through the just money printer of the Federal Reserve. So in my opinion, it's just Wall Street 2.0. I don't think Binance is going to collapse because of the investments all these asset managers have made, but I do believe they're going to get pushed out. And we've seen that with things like Paxos. Paxos was the issuer for BUSD, pushed them out of the States about a year ago, and then literally launched one for PyUSD, PayPal a year later with the same white label service, which goes to tell me that unless that was just an accident and they were just scared a year before, that was a strategic push out. And then, of course, you're seeing them get sued by every country at this point, Brazil, Europe, multiple different places. And they just actually stopped issuing, I think, US dollar withdrawals. So I look at it as either they're going to get slowly pushed out. Maybe they survive. CZ stepped down because the industry wants him to or whatever. Or it gets to the point where they slowly are drained and something does break for CZ where Coinbase or someone comes in and buys them. I don't know. It's kind of go for that, Will. I don't know. That's a lot.
I think that's an interesting conversation. And I agree. I was reading this article. I haven't actually discussed it yet. Actually, Aaron, you and I had this discussion the last time we met. Yep. Is that, I didn't see them going out of business, but I did see them getting pushed out of the U.S. And that was a very obvious, I think, play by the U.S. doing what they did with and the shutdown of Binance U.S. immediately, right, kind of showed that they were like, hey, you're not operating here. We don't care what you do outside of here, but you're not operating here. And I think this is the U.S.'s position. While Coinbase does look like the hero in a lot of things because they come in and say, oh, vote for freedom, vote for crypto. I do think there's some kind of backdoor operations between Coinbase and the government. As oddly as that sounds. And you can also see that more or less through the SEC approving them to become a stock company and so on and so forth, not coming after them for many cryptos that should and have been called securities in the past on their platform. and just allowing them to operate, through conditions that they normally would not allow any CEX to operate under. It's very, very, very interesting. The other thing too is how stablecoins have injected themselves into our whole system. Because it's a free market, they have the opportunity to buy their way into our system, whether we want them to or not. And they've done this specifically directly into the backdoor government through bonds. And this exactly kind of goes into what you were talking about. And I believe like what I have here and what I've been researching is basically Tether reached $72.5 billion in exposure to U.S. bonds, right? That's a lot of money injected. And keep in mind, they're making 5%. If bonds go down to like 1.5, they could sell those at exponentials, right? If they ever need liquidity. They are on the right side of the trade right now, while many people are on the wrong side of the trade. And because this is occurring, they are positioning themselves to actually pressure governments to not do anything to them. I mean, are you going to try and collapse a we'll say liquidity injection more or less into your government, and basically lose that money? Are you willing to lose that money? And yeah, exactly. It goes into what you're saying. We have a fractional banking system. A lot of people don't understand what that means. That's credit on credit on credit. It means I loan a guy $100. That guy then loans off that $100. That guy then loans off that $100. And after that happens, guess what? There's still only $100 initial, right? But we've got $400 or $500 loaned out, person through person through person. And crypto is an exact replica of our economy, essentially, right? It's fractional loans on loans on loans, because you've got this farming over here that's actually getting loans from Coinbase over here, and this farming over here is getting loans from that farming that's getting the farming from, or that's getting the loans from Coinbase. And each one of these two, keep in mind, they're even more risk, because if you're on the third end of that guy's giving 60%. The first end of that's giving 40%. Coinbase is giving like 20%. So how are they affording 60%? Well, they're attracting new money, right? And that new money is but the actual liquidity that you're getting paid out in. It's not that they're actually making the money that they're paying you. And what we call these at the end of the day is Ponzi's, but I don't have to call out any specific
rinse and
ones.
repeat.
It's a rinse and repeat Ponzi. And that's why you have to be careful with high APRs in crypto, because they tend to be Ponzi's. It's really, really interesting that we see this a lot in crypto, though. It's really interesting. I think very much, this is very much like our economy 2.0, right? Banks and then money managers. And this is what happened. I want to point out one stock specifically with the GME stock, right? The AMC stock. They saw the potential in it. What did they see the potential? Well, this guy loaned out the debt, was shorting. That guy loaned out the debt, was shorting. That guy, guess what? There's only one stock. 5 people own the same stock. Well, we'll run the price up. How are they going to pay it back when you have 5x the stock out for the one stock? You can't. So the only thing you can do is try and buy into the buy, so you can buy the stock back to give to the last guy who wants the stock back. Because as the stock rises, what happens? Well, guy A wants guy B to give him the stock back. Guy B loan that stock out to guy C. Guy C loan that stock out to guy D. And now everybody's asking for that stock back to guy A, right? So this person wants back, so this person has to buy 4. This person has to buy 3. This person has to buy 2, and he has to give 1, right? And and now they've created a Ponzi of buy up, right? They forced these people that were short the market to buy into the market to push their bags up. And this is the problem with stock markets. That technically should be illegal, but it did happen.
It did happen, and I think that's exactly what's happening with Binance and a lot of these altcoins, because that mechanism that's been set up that is just generating free yield for them allows them to just rinse and repeat the process and prop up every single asset on the market. And that's what I think is very interesting about this space, because that is called FUD if you bring it up. But I mean, that's the kind of the definition. I have fear of that because we've seen that in the past. I have uncertainty about it because they won't give us a clear audit, and I have doubts about it because that is a failing mechanism. So unless you keep hitting bull market runs. And so that's why I say I think they're going to keep getting pushed out. And then Coinbase is coming in, like you mentioned, kind of as this good guy, kind of as this elitist like group that is backed by the largest asset manager. They have the regulatory clarity. They're publicly traded stock, and they're that road to quality, I guess you would say. And so, this is why I think you see the Federal Reserve advocating for things like complete management over stablecoins. They think they should be the ones that are issuing and saying who cannot and who can control the deposits. That's because they know that if they know crypto is going to continue to grow. And if we can force all the stablecoin issuers out there to fall under a certain regulation, that means the entire crypto sector on a global basis that's investing hundreds of billions of dollars over the next, 10 years at this point into crypto, all will be reliant on the US dollar and allow the Federal Reserve to just ultimately benefit the most from this. It's a huge tack on to the need for US dollars. I think it's very interesting.
Watch PayPal's stablecoin. I will say that. Because that's getting pretty interesting too. And I'm trying to find out if there's any kind of, here's the thing. They don't have the rights to operate a stablecoin in the US. I forget what you have to do it. I looked it up last time, and they don't have the licenses to operate a stablecoin in the US. So I
wouldn't doubt it. Paxos is sus in a lot of ways. Multiple of their boards are part of the whole Bernie Madoff issues. We're talking some big people that probably shouldn't be in the financial sector that operate that. And so I'm not too bullish on PayPal's USD. I thought, when I look at that, I see, they understand this. It's if you can print money out of thin air and you can receive deposits for it, market for it, and allow people to convert. Why wouldn't you just go through an exchange and purchase Bitcoin, right? Why do you need that stable coin outlook? And it's because they can just print free money. I think that's the unfortunate truth.
Yeah, okay. So now we're going to move on to our next topic. And speaking on the SEC and, the U.S. government pushing people out and all that stuff, recently we saw that the Ripple execs got cleared by the SEC. There's been, the big Ripple trial and all of that. I want to know your guys' thoughts on what this means for, crypto in the U.S., the altcoins, and all of that stuff, and what direction we think this case is going to go in the future. So, yeah. Will, you got it. You can lead it. Or Josh, you can.
You can go, Josh, if you want to too.
Yeah, it's cool. So I was going to just say, I think I like to call Ripple the Purdue of the crypto industry. I don't know if you know what Purdue Pharmaceutical is. But essentially, they were one of these early investors, or not early pharmaceutical company that realized that there's a certain drug on the market that they can make better by using morphine and other more egregious drugs that would help with your painkillers and get you addicted. And so, long story short, to get approved by the FDA, they paid the FDA to pass it through. And with all the money that they were making from these markets, these Purdue executives were buying the fancy homes, buying the fancy cars, paying for the fancy parties, having all the Ripple, or not the Ripple, but all the Purdue community and members and team members all come party at, even some of the patients come party at, and they're all addicted to Purdue. They're all addicted to the oxycodone drug that they created. And so I kind of mold that analogy over into Ripple, saying that Ripple's service, software as a service, is pretty good. Pretty good in a lot of different ways for cross-border remittance systems. But the overall XRPL is a very mid-tiered system. And in fact, it's agnostic. They don't even need they don't need XRP. They could use any token on the market. The reason why the developers early on from Ripple created the XRPL and then donated them conveniently half of the supply was because they knew if they can incentivize and build on top of this community with these smart contract protocols, they can access more liquidity themselves and use that in return for the cross-border remittance systems, or to buy themselves nice new Porsches and pay for these fancy yacht parties. It's exactly what we saw. And that was proven in the Bill Hinman documents over the summer, that the holders are actually the ODL. You are the liquidity. You are the exit liquidity. Now, with that being said, that doesn't mean I like XRP. I don't think it's not something necessarily that I'm not bearish or bagging on it. This is just a capitalistic society, and they're playing the game. They're in the financial sector. They're on the registration management group. They're part of the IDSA. They're playing with the big dogs. So for that reason, this lawsuit, I've always thought Ripple was going to win. But for the outcome of it was never that Ripple was going to become some new replacement to Swift. It was never going to become a replacement to the fractional banking system. It wasn't going to take down JP Morgan and all these institutions. In fact, it was just a new player at a very large playing field. And so with that aspect, the outlook of this lawsuit, I don't think it actually has a massive impact on the rest of the crypto industry, because Ripple did one thing that most cryptos did not. is they didn't have an ICO. Okay, it was all pre-minted tokens. And then they donated to evade certain regulatory uncertainties or clarifications, which is why I think they're getting away with only selling XRP as an investment contract to institutions versus everything else. So from most of your altcoins, 99.9% of them, they all had an ICO. So right then and there, doesn't matter. They're going to be completely, they're going to be fought against completely separately. To the aspect of what this means, I think maybe XRP can hit $2-3, but I don't think it's some world-changing currency. I don't think it's going to go to 10K. And Will, I don't know if you share those thoughts, but that's kind of my thoughts on the whole lawsuit.
I mean, I think it's interesting. I mean, the SEC, was basically going after them for a slew of things. The judge ruled one of them as not real. That doesn't mean they can't come after them from other angles. This means they're safe from the law for now, right? It's kind of like going to the court and being like, all right, we're charging you for manslaughter 1, 2, and 3, and you get cleared of 1. It's a very interesting, I would say, rope that you want to tie with this. There's a lot of people who are very convicted to XRP to some ridiculous number. I can point them to the market cap. I think that makes it very obvious on how high XRP could actually go.
But market cap doesn't matter to them.
Yeah, you forgot. They can just burn the supply.
Well, Will.
Yeah, who's going to burn their gold, right? And good luck burning gold. So it's such an interesting concept. I think the one thing to really pay attention to here is that, or at least understand, right? And I know it's not going to be the hot take for a lot of people, and so I'm going to get a lot of hate for it, but it's like, why would I go and get XRP or hire Ripple when I can just create my own cryptocurrency the same way? It's if you're a big bank, you have plenty of money, right? You can just print it. If you're a company, you have plenty of money, at least most companies, on board. You could allocate to it. Like, why would you buy Retail's bags and Ripple's bags to be able to get into a project that is just a money mover, right? This is just a Western Union 2.0 at less fees. And you still got a middleman. As much as people don't want to accept that, you still have middleman. The middleman's Ripple.
Yeah, and I that's where I lose these audiences, like when I'm speaking about that, because I say this topic all the time that pisses off people. I say decentralization is a masquerade. It doesn't exist, not in a capitalistic society. That's because these foundations, it starts with the foundations very early on, but whoever has more money has more control and more power because they're going to have more nodes. In Ripple's case, they automatically control most of the UNLPs that exist on there, or the UPNLs, whatever they're called, which are going to be essentially the nodes for the voting rights. So it's actually technically more decentralized than Bitcoin because you need 80% validation. Okay, well, who's running those validators? Oh, it turns out that in 20 years that it's based off time and who's been a part of that community. So if that means Ripple's the early on adopters of all these validators, they're going to get to validate whoever. It's almost proof of authority in that aspect of who they're going to allow to validate the network in the future. It's it's inevitable to become more centralized over time. So sorry, I just wanted to jump on that point.
No, definitely. I mean, and for Ripple, because of the supply that they own, it's a buy low, sell high scenario for them. They can easily buy you out of your positions with no issues, right? And at much lower margins. Yeah. People don't understand, look up a 5150 attack or look up anything like majority of poll, right? How do market makers control markets? They control markets through having most of the market. It could be 1/3, it could be 2/3, it could be, 1/4. But if you have the majority of the market, you can easily control the ebbs and flows of that market. This is why we have, market manipulation laws and everything else in the U.S. This is why, when people sit there and talk about, BlackRock, for instance, they always say, well, they own 60% of this and 80%. No, they don't, because there are laws against that. If you go and look at BlackRock's portfolio, they own 5% of Apple, maybe, 3% of Microsoft. They're large portions, don't get me wrong, but they're not 20%. They're not 30%. They're not 40%. They're not 50% because you can't own that in the stock market. It is not allowed. There's limitations to what. You can OT, yes. You can OT as much as you want. Yeah. Yes. As much because ETFs are kind of like your fractionalized banking, aka fractionalized stocks, right?
Yeah.
It's interesting.
Yeah.
Yeah.
I want to know that meeting Jack Bogle had in 1975 when he's like, how do we take fractional banking and make fractionalized stocks? Like, let's call these indexes. I'm like, nice. Okay. Great job. Genius idea.
Nobody
I wish I
gets
came
it
up
though. Nobody gets it, man. Like, it's hard to find people who understand the concept of like how this whole money system works, and how things are fractionalized on It's like, how do we expand? Well, we create another Ponzi on the Ponzi, and that's expansion. That is expansion. That's how you make wealthy wealthier, right? That's how you make poor poorer. And a lot of people don't understand that. They think, well, that will lift up the poor. No, it won't. It puts you in a worse position because you have limitations on what you can own. The rich do not have limitations. Yeah. That's my thoughts on that.
Okay, cool. So now we're going to transition to the next topic. So recently, the metals, specifically gold and silver, have been absolutely ripping. They've been going crazy. Peter Schiff's probably very happy, shilling his bags on this podcast every other day. And what does this signify? Because we know gold is, the ultimate inflation hedge, but it's the ultimate hedge against the entire system. So what is gold and silver ripping and the metals ripping? What does that mean for the entire, macro market? Will, I know you're big in the metals. What are your thoughts on this?
As far as gold goes, I think there's, a lot of people are going to say flight to safety. I say there might be some fear, right? Especially when you talk about war and stuff like that. But, we got to look at gold and where it's at and where it's been. Gold for me hasn't really done much at all. Like, we had this triple top high over here. Look, in 2020, we topped. In 2022, we topped. In 2023, we topped. And we're about to come back into that range again. It's like, does it eventually break out or does it fail again? Right? You got to identify the levels when they're there. And from a charting perspective, I just look at it and I'm like, okay, they're going back for the high again. But I would also look at the potential of over here in 2022, where they topped, rolled over, came down, hit roughly around 1980, and then turned over again. This could very well be a lower high. My aspect is from like just, I don't understand the point of a lot of people talking about gold explosion here and there. If you look at gold historically, from 2013 all the way to 2019, you could have bought there, but you did nothing. You did nothing as far as price goes. You gained nothing. You sat in an asset that was stable. I will say that, right? Gold, I would say if you're looking for stability, it's gold, right? Gold will hold its stability, but are you beating inflation? That's kind of the other question if you're just stable. And man, it's such a long topic. I would say there are use cases for gold, right? And those could be coming into play. A lot of people don't understand, like, you start to see assets that tend to come down in, like, we'll say overly bullish environments. And that's what you saw in 2021. Gold actually started to fall back, right? And every other high risk asset started to blow up. But in bear runs, gold and other assets tend to blow up, and it's because the smart money is actually buying up the gold so they can sell it to the dumb money when money starts to flow back in, right? A lot of assets in general tend to do that. Like, we're probably going to see chips start to run too, and that's, I think, mainly because of the CHIPS Act and so on and so forth. But you're starting to see a lot of raw materials being bought while they're cheap, and then later on they'll be sold when they're high. And you'll see that with silver. You'll see that with a lot of these. The only one that I say fluctuates with a positive or negative market really well is probably copper. And it's because it inflows with like house building and so on and so forth. So it does really well with positive markets and does really bad with negative markets. So it's one of those ones that you can track a market's quality through copper because it has more use case and it has people wanting to hold it. And so when you look at gold and silver, again, they're the more expensive commodities. So you want to pay attention to those specifically because they will tend to buy in the worst environments and sell in the best. I don't know if that makes a lot of sense, but that's how I feel.
I have the gold copper chart on it now in comparison because that's like a easy way to historically look at your recessions kind of. Not kind of it's an indicator a lot of people use, but kind of from my sense, I agree with a lot of that sentiment. Is I think we are moving more towards a commodity. It could be a decadal commodities race again, which we usually historically get every 10 to 15 years. It's 10, 15 years up only kind of for stocks, then followed by a consecutive sideways action, maybe a 30% dip, crab market for a stagnated economy for however many years that prolongs. But then you have commodities do the opposite, right? And that 10 to 15 years, they generally are rising. Of course, there's 30, 40% drops in, fluctuations between then, but generally you got that turnover. And so in the high interest rate economy that we're just in, and the amount of debt we have accrued, the whole, real estate issues and crisis taking place in China, then you have the Middle East issues, and the oil markets don't know what to do because they're worried about Iran. I don't think something will happen out of that. That'd be wild. But either way, the United States printed terribly in 2020. We printed $9 trillion in the last 3 years. That's going to impact us for the foreseeable future, and we're going to print more money. You have Janet Yellen from the Treasury coming out saying we can afford to fund 2 wars. Meanwhile, our Congress can't even budget, on a 3% a debt to income ratio. So it's like, where are we going to get that money from? Probably don't know. But I would agree with Will's outlook here. I think the biggest indicator would be if Peter Schiff launches another book about a market crash. That gives us another 5 years. It's kind of like Groundhog's Day of, it's going to be sunny on the stock market. But in this case, I think he's the boy who cried wolf. You haven't beat inflation in over a decade. It's up 50% if you bought it at the bottom in 2014. And then the precious metals market is one of the most manipulated metals in the industry. So I think we're seeing the same exact thing kind of structure its way into crypto. Now, where the difference comes in, I think there's far more utility for Bitcoin on top of gold. And one is going to be the utility aspect in converting wasted energies. I cover that a lot with the, you have Middle Eastern countries now investing billions into infrastructure to convert wasted energy into a net value through miners. So I think you're also starting to not only see Bitcoin trade as more of a commodity, but you also have to remember that Bitcoin's only got a $500, $600 billion market cap or whatever it's at today. So, by the time it even hits the same threshold of a gold, you're looking at still significant gains coming from that side of the sector. And Bitcoin has been following. Jaxis is also a great analyst on Bitcoin because Bitcoin talks about this all the time, but it's been tracking since 2020. It correlates nearly identical to the patterns of commodities from oil, gold, silver, copper, etc. It just fluctuates a lot more and is more volatile because it's a much smaller asset class, but we are seeing that conversion. So I think it's going to be an interesting year ahead of us. I think a lot of it's going to rely on your presidential elections. Usually presidential elections results in a bullish outcome just because the sentiment kind of feels a sense of relief. But to be honest, we also have the outcome of this, that markets are at the most divided point in Americans' history. Donald Trump's changed the game in 2016 when he made politics about reality and started making it this reality TV show. And whoever's the loudest and cause the most chaos is going to win. And so, to be honest, I'm excited to just report on this next election because I have no idea what's going to come out of left field. I don't know. But generally, historically, markets are definitely bullish for presidential elections.
I like how you brought that up. Look, if somebody came to me like, who do you think will be the next president? I'd be like, dude, it's a coin toss. I have no clue at this point. I can't, dude. I can't. I don't know if you watched his speech at the beginning of October. It had me crying. He could do stand-up comedy, man. He did an impersonation of Biden. And I actually got banned on TikTok for posting it because it was bullying harassment. Hit like 600,000 views, and they took it down. But like Donald Trump's on stage acting like Biden, and so he's like, where's the stairs? And then like just being Trump. And it's just funny. But that's the point, is like that's our politics now. Like nobody's listening to a Scott or, a Mike Pence. They just want to see memes and tweets. I find it funny because you said you got bullying and harassment. I mean, you can go after any public official. There's no such thing as bullying and harassment when it comes to, like, if you choose to be a public official, you are choosing to be bullied.
Yeah.
That's basically it.
Yeah.
It's high school 2.0.
Yeah, so I'm glad you brought that up, Josh, because to our next question, we got a couple more questions. We've been going for about an hour now, so just a couple more questions, touch on a couple more points. So what is our 2024, kind of outlook? Are we on the verge of recession? And then we have obviously the presidential election that's going to come up. There's a ton of stuff going on with spot Bitcoin ETS. We have the interest rates that, possibly going to get lower. And then there's just a bunch of chaos. What is our 2024 outlook? Josh, you got it.
Yeah. So 2024, I think we're going to move more towards a stagnated economy. I don't think interest rates are going to be reduced anytime soon. I think the Feds are going to pause for a very long time. I would anticipate if anything breaks in our economy, it's going to be honestly after the elections, or if I see market sentiment within the next 6 months start looking at, hey, maybe the Feds were right. We're going to get a soft landing. Recessions come when everybody's least expecting it. And in the sense of where the market is right now with like very low unemployment, manufacturing coming to the States, we still have that economic growth. We're hitting good margins. I think we're on, 5% we're looking to hit this year. I forgot what our GDP growth in the United States. So as long as that, the metrics are still strong, this can prolong itself into 2025 perhaps. And so for that outlook is like, I expect stocks to maybe see a relief moving into Santa's rallies coming out of December, but I expect over the first quarter and the second quarter of the year to see maybe some downside action or just sideways market action for stocks. For crypto, I think honestly markets are going to bullishly anticipate that spot ETF. I would expect us to be at probably 40, 50, 60K before that gets approved, because once it does get approved, that means all the inside traders from the committee of 12 people that are literally approving it or not, and then form the BlackRock and all these asset managers that they're being approved or not, that escalates quickly and usually you get a sell-off. So it's kind of a buy the rumor, sell the news event. But I think it's too hard to predict in terms of what 2024 is going to look like, just because of the macro factor that's playing into this on the global scale. I mean, there's so many tensions. Anything can happen. A wheat silo can be blown up in Ukraine. All of a sudden, we have inflation running rampant. Again, in the States, we have the oil basin, which is literally under massive tensions because Israel is being lobbied by the United States, and that's going to be a long war. Ukraine, I don't think is going to finish anytime soon. I think Ukraine can't beat Russia. That's a forever war. And then again, you have the tensions escalating with China and Taiwan. So, I kind of look at this from a 5-year outlook. I'm like bullish on crypto, long-term bullish or long-term bearish, I guess I would say, on long-term bonds. But in the next 6 months, I think you can see the 30-year for our bond yields creep up another 0.5%, no problem. And I think that the Feds could raise interest rates by an easy another 50 basis points if they have to. 25 maybe this next month, and maybe in 4 months inflation stickier than expected. I don't know. Will can probably have a very in-depth outlook on that as well.
So I would like to just point to the chart. Is it okay if I share screen?
Yeah.
Yeah.
Okay. I just want to kind of point to the charts here because I think that this is a very good time to talk about that specifically. But if we were to look at the charts here, and I like to use the SPX, our favorite, Ponzi on Ponzi. Hold on 1 second. I don't know what infinity mirror is, but it said to avoid infinity mirror or something. Basically, this wasn't really a crisis, but it was more of a lack of employment, which we could get now, right? That's always a scenario. But this was 1968, right? Going into basically the 1970s, this was kind of like an economic issue due to lack of employment. I don't think we're experiencing lack of employment, or we are experiencing lack of employment, but we don't have a lack of people, right? You can force those people back into the market. So in that scenario, I think that this can be avoidable. This is 1973, and they like to call it the recession of 1973 to 75. Even the 75, we were already coming out of it. And then this right here is our 2000. This is our 2008 bubble, so on and so forth. So the reason that I'm bringing these up specifically is because you tend to see these scenarios where these recessions happen, right? And a lot of people don't really dabble into what can really occur here, but your recession is roughly about a year, right? You're a little bit over a year here. You're roughly in that year range here. Over here, you're basically 2000 to 2002, right? And then over here, you're basically 08, basically into 09, so about a year. And we've been in this downfall for roughly about a year. And I think a lot of people are just not really willing to accept that from a charting perspective, or at least a time perspective. Bear markets don't tend to stick around all the time. But one thing I wanted to point out specifically, the reason I brought this up is because if you look at your highs, right, and you look at your highs over here, so recessions tend to periodically happen in the same area over and over and over again at the highs and at the lows. But your biggest recessions, they don't happen here. They don't happen here. They happen back at the highs, right? all of our recessions historically have been at the highs when you're seeing the recessions, right? At the highs. Over here, again, I would arguably say this is your high, right? So if I were to look for a recession, or at least an incoming recession, I would look for something to occur closer to here. And if that's the case and we are where we are, what I would think is that we could probably run to like 2025, 2026 and then hit and then miss at that point. And I know this is kind of a crazy chart to really look at, but this is something we've historically done time and time again. And that's what I would think, like, if we're going to come into a recession, that we're going to do it at a higher price for SPY at least, right? And this is just me looking at charts. It's not me looking at macro data and all these things. And I think that this can be drug out due to employment. I think it can be drug out due to the amount of liquidity that we injected in 2021. That will float markets. A lot of the fractionalized issues were resolved because of the money injection, right? So even though we were at a point to where we should collapse because the fractionalized banking system is pretty much, came to a standstill, and now we have so many loans on loans on loans, those can't be settled. A lot of those got settled through the money injection that happened. I also looked into some scenarios, and this could be false, so I don't want to come out and say it's real, where your average person was probably getting $1,200 checks, where in some cases businesses were getting like thousands on thousands of dollars in checks.
$6K per employee.
Yeah. So to be able to compensate,
it's crazy.
Yeah. So when you look at that, it's like, man, if that's the case, then these businesses were floated, people were floated, and all that money got soaked up and fixed some of the fractionalized banking, right? And that could have been really the purpose of the money injection, is like, how do we resolve the current issues? Well, we print it. And they printed it and they created the issue, right? And that money flowed back in, and now it's being resolved. And I think like what we're going to see is something like this. So really,
so you'd be saying it'd be retesting its previous all-time highs. You're not expecting to shoot up. So that would be more approach towards a stagnated.
Correct.
Yes. Gotcha. Okay.
Yes.
Okay.
So a stagnant market is a market that never tends to come out of its area. Yeah. Basically 2000 to 2010, right? So, or we'll say 13. So the market, if you looked at it from a holistic standpoint, you could have bought, and then held, and then you'd be right back where you started again. That's a stagnant market, right? And then you come back up and you're like, okay, I'm back in the green again. And then eventually you break out, 10-year cycle, boom. And really, I think that that's what we're kind of rolling into. We could even chop here for an extended period of time, come up, retest, and then come back down, revisit the lows. And it tends to want to do this too. As much as people may or may not want to accept this, it tends to want to form lower lows on that second retest of the lows. So you have to be really careful on that. Same thing over here, as you can see, lower low, lower low, lower low, all the way across. So even though you get close to equal highs, if not, equal highs, you always get wrecked worse on the next round.
And I would imagine the gold chart on top of that is literally completely inverted.
Yeah, exactly. And so like when I look at this ripple, it doesn't matter how much it came down. What matters is that you had all this accumulation, and this will get retested later, right? And this is why I think bears are wrong to think that the recession happens now versus happens later, because it tends to always play this way. And that's why I think we'll have a bull cycle in crypto. I think we'll have a rally in indices, back to all-time highs, stagnation, aka. And I'll be really interested to see how Bitcoin plays in this cycle, because if Bitcoin tops at 60, 69K again, I'm playing Bitcoin just like I'm playing the SPY at that point. It's going to be like, all right, Bitcoin SPY, let's do it.
I wanted to say for anybody watching too at this goes exactly what we were talking about earlier with the commodity cycles. Because if you actually, what you circled between 09 and 13 to the left of the chart that's literally the top of Bitcoin, or the top of gold, silver, and a lot of your commodities back in about a decade ago. So it's kind of the same perspective on what's going to happen over the next 2, maybe 3 years.
Yeah, if you look at gold, basically through those same sectors, where was that, roughly 2000?
Yeah, there you go.
2009. So gold literally did almost, nothing through all this period. And then over here in 2000, while indices were stagnant, look at gold. Look at gold. So yeah, you could very well be on some kind of secular bull run, but I can tell you this: look, I would not expect anywhere near what happened here.
Well, what I would like to
Take
point
this
out
and
is
compound.
November 2004 is the gold-based ETF. So if you put that on the chart, look what happens. It literally dumps by like 15%. I see the little dip there, but November 4th, it dumps by like, I think 12.5%, although gold was literally like a $4 trillion market cap. So we're talking a lot of money right there. But then even after the 6 month of kind of selling pressure, after they manipulated the markets in the early 2000s and late 1990s, it still ended up after that going up 300-400%. So that's like,
Yep.
that's like $7 trillion right there.
Now imagine if Bitcoin followed this.
Yeah,
that would be some insane,
some hopium to
ridiculous. Look, guys, I'm just throwing it out there to entertain it.
It's I think it's highly probable. I don't know. I think with the whole net carbon or the whole the conversion of wasted energy, like it has so much utility. The marginal cost of it, like the utility far exceeds the value of production. Like,
well, people don't understand the wasted energy use case. A lot of people don't understand that there's a net negative on our energy, man. Like, and it's wasted. It's literally wasted, right? Just too much power coming in that can be utilized in other places, and Bitcoin can offset a lot of that and actually balance the grid better. So the power comes in at a better flow. But it's more of an engineering mind that can understand that.
I don't know if either of you guys saw the BitVM coming out off of Taproot. The developers figured out you don't have to change the infrastructure, but smart contracts will be coming. So it's like layer 2s will scale on Bitcoin, making more development, more VC pump and dumps. Instead of building on Ethereum, they're just going to build on Bitcoin. Yeah, it's kind of like I don't know. It's weird. The more that you're in crypto, I feel like the more you pull towards Bitcoin. Again, I still like a lot of cryptos. I'm not a maximalist. I do want to make that clear.
Yeah. You got anything to say, Will?
I just wanted to kind of pull these up so you can kind of visualize what we're talking about, and then we can move forward. But like, if I were to put this on the monthly, I think this is a different chart. Oh yeah, here's the same chart. So if we were looking at it, like this is your stagnant market on stocks, and just look at gold as I run across.
Yeah, just like.
And then as stocks are about to break out, that's where you see the stagnation on gold. Gold gives a lot back, then runs sideways, while stocks do what?
Run.
Boom. Boom. It's a rotation.
And those cycles are becoming shorter and faster over time. Because if you go back to, I think, the 1970s, like 1968, I think. If you even start before, obviously, when we came off the gold standard, I think it's like it went from like a 12, 13 year cycle to like the cycles are getting shorter.
If we look at, let's go back to there. So right before the big gold boom.
Yeah, there you go.
Look at stocks and look at gold. Like gold just annihilated stocks to the upside. So
there was like the big 20-year.
and then it rotated back. Yeah. So you have to be in the right assets for sure. If you're buying stocks right now, you could be holding those for a very long time.
Oh, shoot.
If this ends up playing out. Aaron doesn't like to hear that.
Yeah, no.
Yeah, I thought you're buying oil stocks.
Yeah. Well, I got my little Bitcoin stocks, Coinbase stock. But yeah, that's our last question. We've been going for over an hour now. This has been great. But our last question is going to be, of course, everyone watching, this is not financial advice, your own research, but what are your two guys' top picks for the bull run? We have AI that's booming. There's a lot of big stuff that's coming up. What do you think are going to be, what are your top, picks for the bull run? It can be stocks, crypto, whatever it is. So what do you guys think is going to do good?
Well,
mine, I think I think chips are going to be good, but they're going to go stagnant. So I'm not looking too much to chips, but I am looking at like EVs. I think the EV market's going to definitely make a boom off a lot of this. So I'm watching EVs. I'm watching a lot of commodities though too. I think commodities is definitely something to keep an eye on. I don't really have a lot of picks when it comes to commodities at the moment. I think oil will probably go to zero again at some point. And that's not me being facetious. I think that the oil plays a cyclical cycle that's really weird. And I think like it's gonna boom and it's gonna bust. But I think when I'm looking at a lot of this, man, commodities, let me think of some solid areas. I mean,
You following milk?
yeah, I mean, I've heard people talk about like wheat and milk and stuff like that, and like just like your simple foods. But I think there's other commodities that will still do very well. I think tech will be interesting too. I think it will go into stagnation. But I mean, primarily for me, I like crypto specifically, right? Like that's my main bread and butter. I have been accumulating a lot of Bitcoin, a lot of Bitcoin. I know a lot of people are just like, oh, you're going to get no exponentials in Bitcoin. Well, if gold blows up and Bitcoin follows, you're going to be completely wrong on that. So I'm definitely watching that one. So I've accumulated a lot of Bitcoin. I do have some, we'll say, regular crypto projects. A lot of them are more based. I don't want to shill, so I try not to give out hints, but I have some like gambling type crypto projects. And it's not because I'm gambling and I'm expecting gambling to play out, right? You know how people are. That's a lot of people in the space have that addiction, and they find beta on beta, they're going to jump in. There's some really solid gambling projects within the space. I expect those to continue to do well. I am expecting another one too, Joshua, and this is going to be really weird, but like gaming, because in these economies where you see like basically stock companies go stagnant outside of the commodity sector, you're going to see a lot of boredom because there's not a lot of growth, right? You're going to see a lot of people not growing. And so that boredom is going to flow into how can I escape the boredom of nothing going on? And you'll see a lot of people move into the gaming sector too. So I'm watching that on both.
That's interesting.
Yeah. You think about it. It's deep.
I gotta look at that. That's interesting. Yeah, because I love gaming, but I'm like,
yeah,
I don't know.
What do you do when you're bored? What do you do when there's no money? Right? You play games. Well, no.
I know. Yeah. I'm a nerd. No, but
no.
You play games. You play video games. Yeah.
No. I'm not saying. I'm definitely saying you could pick up a book. 100%. But I'm saying most people won't pick up a book.
No, they pick up Fortnite. They pick up Apex.
Yep.
Yeah. No, that's fair.
Yeah. So that's what I'm kind of watching. I got a big list here of different things I'm watching. I think like the war sector is going to be good because I do see some kind of, tension. I do see tension. I just don't think it's yet. I think it comes later. And I find, yeah, and I find it funny how people try to act like Russia's some kind of competition to the U.S. They're out there like pulling like tanks out from like 1968 because they're running out of.
The United States is literally using a proxy nation. Europe's poorest proxy nation, by the way. Yeah. And it's been 2 years.
I like how you pointed that out. We're using them because that's exactly, we're paying them to fight our war for us, essentially, is what's happening.
No Americans there.
Yeah.
Well, maybe volunteers, but yeah, no, they're not a threat. Well, even China is not a threat in terms of amphibious assaults, and it's like that's going to be Taiwan. So it's like we're still years away from that, which is why we're funding them. That's why we're giving them defense budgets, so to make it harder.
Yeah, I think the time for YOLO and all in on meme coins and stuff like that. I think that time's coming to an end. I think a lot of people aren't going to realize that or want to hear that, but that's the reality of things. Like people are going to look for more cyclical things that matter.
Not projects like Solana that have no utility. Or,
oh no! Come on! Come on!
But here's the thing too. I'm going to end it, but. One thing I wanted to point out is these parts in the market where stocks go stagnant in tech, right, and all these other ones. This is usually the parts where the economy really grows through evolving, right? We get better at tech, our tech grows because there's competition at that point. When there's no liquidity, there's competition. When there's competition, a lot of things evolve and become better. Whereas like when you're in that 10-year spurt for like, that we've been in on stocks and everything else, you're essentially, nobody's building anything new. It's the same iPhone for multiple generations because they don't have to make it better. Why? Because there's plenty of money. There's plenty of money in their sector. But when that money dries up, they have to really appeal to the consumer, and that means make things better. So I think that this is going to be a really interesting 10 years. I think tech is really going to evolve in a lot of ways, and we're going to see things that we've never seen before. And we need to follow and track those, and we'll be able to get into those sectors. I'll give you some sectors, again, because I don't like to show names. So I'm watching AR, VR, augmented reality, virtual reality. I'm not watching augmented for like, hey, can I sit at home and like look at some person at my house? It's AR in the medical field, AR in the construction field, VR in the construction field, VR in the medical field. Those are very important. And medical is a great sector, always doing well because people are always messing up and getting hurt.
Great in war.
Yeah, it does really, really well in war. Exactly. So those are kind of sectors that I'm really paying attention to outside of commodities, and medical tends to do well regardless through any type of conditions. So like I think there was a couple insurance companies I was looking at. I'll try and pull them up later, but they basically like U.S. healthcare or something like that. Like the chart's just like straight up, never had a retrace. It's basically a health insurance because those companies they don't lose money. They just continue to build. Yeah, they're exactly.
Yeah, they're exactly Ponzi's. Yeah. I worked for an insurance company for like 2 weeks and realized that life insurance was just like, I was like, wow, this is a scam. But I did not want to convince people to put money into that every month. I agree with like all those points. Yeah, I'd say my two biggest things are I think Bitcoin's still fundamentally the most misunderstood and underestimated crypto that's on the market. I think people like 99% of the industry is literally all marketing against Bitcoin to buy their asset. That's literally just a SaaS model wrapped by a VC and a token that is, primarily a shitcoin. But the other sector I think is going to be huge, and I'm going to be the same way as, Will here and not necessarily give out a direct token, but is the decentralized science industry. I think that's going to be massive. I think specifically in longevity, space biosciences, and genomics, you're going to have a lot of scientific breakthroughs. And there's money pouring into that. So despite consumers not having any money in this next, year, we're pretty much all broke. We're all indebted. We're all have massive credits or, massive credit limits. Your billionaires in medical, that's all getting massive investments and also government subsidiaries to continue to provide more and more research in these categories. So for that reason, pharmaceuticals heavily, especially with the division taking place and geopolitical breakdown of globalization, because as we move towards more a regionalistic society, the advancements are going to come through decentralized autonomous organizations that can communicate across borders and utilize things like AI. AI is a sector I'm insanely bullish on, especially with AR in the healthcare industry. There's actually a few products I've worked with and gotten to test their beta models, but that industry, I don't think people realize how big it's going to be. At all. I think there's going to be all it takes to. This is what's crazy about science. All it takes for all it takes for this entire sector is one breakthrough to take place that is innovative in a way that, as Will was mentioning, is going to elevate society and advance us and progress us to the future. And we are on the precipice of that. AI is being utilized with AR. Both augmented reality and virtual reality to escalate these things through on-demand correlation matrix data set models or general purpose models that have been built to advance scientific discovery. So the pharmaceutical industry, specifically in the DeSci sector, I'm insanely bullish for. I would agree, honestly, with insurance and companies, though, as well. I just don't pay attention to that. Anything of that sector. And then, again, commodities are going to be your huge factor. And what I would actually pull up if we had time, or if I just recommend for the audience, is watch the
pull it up.
Yeah, this I'm going to pull it up right now. Is the ETH to Bitcoin chart. A lot of people love utilizing this chart, but this chart means one thing and one thing only to me. Let me pull this up first. Let's go here. Can you see that?
Yep.
Okay, so this to me, I mean, Ethereum is just dying. It's about to fall off. This is the monthly. I mean, let's go to the weekly here, but just broke through the 200 weekly EMA. And a lot of people use this ETH chart to signal when a altcoin bull run is going to take place. And historically in 2017, of course, the dominance for ETH and altcoins just destroyed Bitcoin as they outpaced it on the market. But if you look throughout history, I mean, it's just getting slower and slower. It's not being able to retain as much dominance in that market. And that's because there's more competition coming into these markets, as these are simply SaaS models that are open source. And so what happens is you have venture capitalists come in with one or two Silicon Valley employees and go, hey, scale this in one way or critique it in two. And we're going to market this and prop it up as the next best, software that exists in these markets. And so why I like looking at this is at the times that we're currently in this market, Bitcoin is retaining more and more dominance. And in fact, if you put over things like Stacks, which is a layer one on top of Bitcoin, and Bitcoin DeFi products that are in that ecosystem, they're not correlated to the altcoin chart. They're correlated to Bitcoin. And that's because they're part of that liquidity cycle. So I would say also in this next cycle, pay attention to layer twos on top of Bitcoin, because once you have that spot ETF, that's where your VCs are going to want to, build. That's where the liquidity is. And so this chart actually scares me in the sense that even though this is something I think everybody needs to be very aware of, is this next cycle, even if Bitcoin is pumping, yes, of course, altcoins are going to follow in a way, but it may definitely not be like previous cycles where altcoins always end up overtaking Bitcoin dominance, because Bitcoin has now the spot ETF product. It has more utility on a physical scale with the energy waste. And that's going to just flow over into Bitcoin's ecosystem with layer twos that are built on top of it. So I don't know, something interesting there. Of course, this will definitely grab more liquidity, but this goes to show me that Ethereum's definitely not keeping up with commodities.
Well, one area too to pay attention to is the Lightning Network. I think a lot of people don't talk about it enough. I think that will continue to get attention. I would also point out too here in the chart, if you were to just zoom out quite a bit there, and I think this is the most obvious thing. Look at your high in 2017 and look at your high in 2021.
This is 2022, 2021. Yep. And then the other thing is this. I mean, your volume is just...
Yeah. So what we tend to call that in the trading world is lower highs, which means that you're getting less and less attention as cycles continue. If Ethereum breaks into that lower range again, if you were to draw a line across all those lows and Ethereum hits that, I would expect that we're going to have an even lower high on the next cycle. And if that's the case and you get a lower high on the next cycle, I would be very concerned about Ethereum's place in the crypto ecosystem.
Yeah. And I think it's very important. People are but I don't blame also a lot of retailers. I think I blame most of the marketing from a lot of these products is that they're a better version of Bitcoin, that they're scalable, decentralized, etc. And it turns out that any proof of stake, doesn't matter what you build, is going to become centralized over time. It's going to conflict with security issues,
100%
issues, and that's the reality of this industry. But
you need a lot less of a pull of a proof of stake than you need of a proof of work. A proof of work, you'd have to own 51%, and anybody can open a proof of work. So let's say you were to go and try and get that 51%. All it would take is, people starting to open up more against you to keep you from getting that 51% when it comes to proof of work. Whereas like proof of stake, once you buy up that portion of the pool, everybody else is screwed. They can't do anything to buy you out of that position because you've already allocated and bought that position. So it's a very tough road to kind of bounce between proof of stake as the way to go for proof of work. And again, one thing I want to point out is the energy model for Bitcoin and the fact that it can pick up wasted energy, and definitely look into wasted energy if you don't understand what that is, and you'll understand how that will help and how it will impact we'll just say the grid in general, right? When it comes to electricity, and how much better our electricity will be with Bitcoin miners picking up that wasted energy.
Definitely. Yeah, I completely agree. Crusoe Energy, CRUSOE, that's a great place to start for that, and just understanding flare emissions and the mitigations. But that's the thing about this is I'm trying to follow the money, and it's like when you realize 51% of tax, okay, well, who's now part of this network? It's like, again, BlackRock's invested into this. And if we understand that, they understand that. We're talking about some of the smartest traders in the world. They control more GDP than China and the United States combined, if you include their Aladdin system. So, when they see this, that's what I understand. And they're not in Ethereum. So, and things can shift, of course, in the next year. And that doesn't mean Ethereum can't pump. That's why I talk about, like, in certain videos, I'm like, okay, ETH maybe can hit 5-6K in this next cycle again. Maybe it doesn't go to the 12-20K that people were predicting, or some people saying $80,000, $200,000 Ethereum. Because at the end of the day, I just shot cards everywhere all over my room from a package. That was funny. I don't know if you saw that. These are, Bitcoin playing cards. Yeah, I think that's what we'll watch out for. But I don't want to keep ranting, Aaron. Sorry. I can keep...
Yeah. It's fine. It's fine. We'd love to see it.
Aaron's like, I haven't had lunch yet, guys.
Yeah, same. Yeah.
No, yeah. So for our last thing, do we have any final thoughts? Any wrap up stuff to talk about that any of you guys want to touch on? Or we good to go? What are we thinking?
I mean, I think we touched everything, people need to know. I think there's going to be a lot of people buying into the exit liquidity of stocks. and not realizing that commodities are about to run. That's really what I think. And I think people are fading Bitcoin in a bad way. I mean, 30K today. Like, look at the chart. Everybody said we're going to lower 20s a week ago. Like, I don't get it.
It's falling gold today too.
Yeah.
How about that? How about that?
I'm definitely with you guys on the Bitcoin thing. That's why, I'm into the Bitcoin miners a little bit. But yeah, I'm very glad that we had this discussion today. This was definitely really, really good content. Thank you to Will and Josh for coming on, the two macro heavyweights. And before we end this video, where can the audience find you guys? Shill your socials and anything you want to shill. So, yeah. You got it.
Yeah, it's Joshua Jake on all socials. As simple as that. I'm on YouTube, TikTok, and Twitter. I'm also a part of Cryptos R Us's new show, CRU Plus, where I host a show called Beyond the Headlines, and I go through macroeconomics and international relationships, and then, of course, the crypto market. So definitely check out those. And, of course, I'm also on Because Bitcoin, hopefully once a week. So, but we'll go for it.
Yeah, I am Will's Outlook, all socials. I operate on Twitter. You can find me under Will's Outlook. You can also find me at Because Bitcoin. That's who else I also operate with. And I also have a YouTube channel, which I have not been keeping up to date with, which I will try to do more in the future at Will's Outlook. So, yeah, if you're interested in checking out that content, you'll see a lot of my early stuff and stuff that I've been trying to provide as of lately, raw and uncut, because I do meetings typically with people too. So I usually post those on my YouTube.
Cool stuff. And yeah, if you are watching this right now, make sure to subscribe to my YouTube channel. I'm posting daily videos. We do a weekly interview with a bunch of people. We just bring people on. And yeah, make sure to like, subscribe, comment, let me know your thoughts. And yeah, thank you for watching.